Hello and welcome to Purple Trading. This is Giriago from the Purple Trading Desk, and I'll be covering the following tutorial on understanding Forex. So understanding Forex is particularly important for experienced traders, new traders, people looking to get into Forex trading. So it's important to have a background, a good understanding, and ultimately this will help when looking at your MT4 price charts to give you a better idea of what's going on. So in the following tutorial, we're going to touch on some main topics, and this will be a Forex overview, look at the Forex market or markets, types of analysis, key economic indicators, the role of central banks, MT4 navigation, useful features, tips and tricks. So this will be a two-part video. First, we're going to look at the Forex market in general, and following on from this video will be setting up your MT4 and the use of some useful tools and special features that you may wish to apply and manipulate on your chart. So moving on, what is Forex? Basically, foreign exchange market determines the exchange rate between two currencies. The exchange rate between currency pairs is determined by people speculating whether the central banks are likely to make changes in monetary policy. So banks are key in affecting the country's economy. They have certain tools that they can use to either better the economy, and we will go over these during the presentation. So it's the anticipation based on economic data that comes out regularly or even on a daily basis that makes people speculate in the market, either on the increase in value of an asset or a decrease in value of an asset. Some assets are correlated. Some commodities are correlated with currencies. So everything's affected based on speculation and sentiment. So the value of one currency increases over another currency if the market feels it's in a better economic situation compared to its counterpart or counter currency. The value of a currency decreases over another currency if the market feels it's in a worse situation than its counterpart or counter currency, based again on economic news, which could be daily, monthly, and we will look at where we can find all this information. So traders profit by correctly speculating the future price of an asset and or the currency pair. So the Forex market, the foreign exchange market, sometimes referred to as Forex, FX, or currency market, is a global, decentralized, or over-the-counter market for trading of currencies. And this essentially determines the foreign exchange rate. The main participants in the market are the larger international banks, financial centers around the world, which function as anchors of trading between a wide range of multiple types of buyers and sellers around the clock, with the exception of weekends. So it's a 24-hour, 5-day-a-week liquid market. Obviously, you need the liquidity to create trading decisions or generate trading opportunities. So the foreign exchange market is unique because of the following characteristics. Its huge trading volume and represents the largest asset class in the world, leading to high liquidity. Its geographical dispersion, which simply means it's available and can be traded from anywhere. with the use of a laptop and internet access. It's continuous operation, so it's 24 hours a day except weekends, trading from 10 o'clock GMT on Sunday, Sydney, until 10 GMT Friday, New York time. The use of leverage to enhance profit and loss margins, and with respect to account size. So the Forex market has been readily available or made available to retail traders, apart from banks and financial institutions, by the brokers offering clients leverage to be able to access the market with a smaller investment amount. So market sessions and trading hours, and below we can see the representation of the active trading sessions of the interbank and retail FX markets using London time zone, as this is a hub or the main hub to Forex trading. And simply from here, this highlights the world sessions across the world. We have the London session in the morning from 8 a.m. to 1 p.m. Then we have the New York session, which overlaps the London session, the afternoon session in the UK. And this tends to be the busiest period and the most traded period. And it's sometimes referred to as the nylon session, where the two sessions overlap. And thereafter begins, from the New York session, begins the Sydney and Tokyo markets. These open and continue throughout the night and the early hours of the morning. So this represents many potential trading opportunities, and I'm sure as you grow as a trader and develop your own ideas and strategies, it's just a case of opening your laptop to see if there's any potential opportunities to make or take advantage of. So a trading approach and types of analysis commonly used. We have technical analysis, obviously, and this is the use of previous price action to determine future price action. And also fundamental analysis, and that is interpreting economic data, central bank decisions, live speaker events, and geopolitical events to speculate the future value of a currency. Now, interpreting economic data is pretty straightforward. This is timetabled and scheduled data, which you can find on the internet. What time it will be made available, and this affects the market ultimately based on results and whether the actual result deviates from the previous and the forecasted result. Live speaker events are normally when the heads of central banks are speaking regarding the general economic situation, and these normally happen. They can be standalone events. So, for example, President Draghi, who is head of the European Central Bank, may be speaking on a particular day, and the markets will be eagerly anticipating his comments. And also, we have minutes of events. So when the central banks convene, there is normally a session after, and the minutes are discussed. And this also tends to create a high degree of volatility and trading opportunities. And obviously tied in with this will be geopolitical events, current political situations, and even the use of social media by people in high power that can easily influence the markets now. So the key economic indicators, central banks use three main economic indicators to determine the general state of the economy. So they look at inflation, which is the cost of living, and the price of goods and services. Ultimately, inflation um, will have an effect on spending power relative to the current interest rate of the economy. So if inflation is high, then the banks may consider raising interest rates to counteract this phenomenon. Okay. Otherwise, if inflation is low and the reports are coming in lower than expected or deviate from central bank expectations, then this could be interpreted as companies will be making less money, therefore less profit, and ultimately somewhere down the line um, could mean job losses, potential closures of companies, and so on and so on. So this is how it's perceived. This is how inflation is perceived uh, by investors, which ultimately has an effect on the value of a currency. Another key important indicator is GDP, or gross domestic product, and this is referring to economic growth. So a good economy, or a healthy economy, will rely on healthy economic growth. Production data, birth rate data, and so on and so on highly influence um, this indicator. And ideally, they would like unemployment to be less than 6%. So where you can find this information is the economic calendar. I personally use Forex Factory. I've left the URL there for you to have a look at. And this will highlight the daily economic reports or events coming out with specified times. The red flag events that you will see generally indicate that they have the most impact. And likely, again, you need volatility to make trading decisions. So if we just briefly go over to the calendar, and this is what you'll see. Today's a bank holiday in the UK, and earlier today there was something coming out for the euro. It was a medium event, medium impact. And here we have the actual result which came out. It's a survey, it's a business climate sentiment report. Better than expected, better than the forecast, and better than the previous. Personally, I find that when the actual result is not only better than the forecast, but better than the previous, it tends to have a better impact on that currency. Okay. So it's flagged in green to tell you that this was positive for the currency. So moving on to the role of central banks, they decide on monetary policy to sustain a healthy economy. They have certain targets in mind that they would like to see consistent, like the ones we spoke about, and they are normally the same for all central banks. So they believe 2% GDP is sufficient, which is economic growth or gross domestic product, and a 2% inflation target generally. So any sustained deviation from their targets, which are predetermined, which is good for the trader. So we already know this at hand, and we can make trading decisions based on these economic reports. So any movement away from this, or ongoing movement away from their predetermined targets, could lead the banks to take action. And this will be reflected in the charts when when the economic data comes out. Okay, so there could be a shift in sentiment um, based on positive or negative results. So the speculation of any and or actual changes in monetary policy will generate a high degree of buying and selling interest. So not only will the economic data affect the value of a currency, but also any hints from live speakers, people in power, and minutes from central bank meetings. The minutes I'm referring to is after the meeting, they will give a brief press conference to the public, making them aware of their intentions. And people will buy and sell based on this information. So the influence of central banks, surprisingly, they don't have many options. They can either raise or lower interest rates according to inflation. So if inflation is deemed to be too high, then they will raise interest rates to give people more value for their money and better spending power to counteract this. They can also introduce quantitative easing, which is the printing of money. Although it's seen as a negative thing, it's an attempt to boost the economy. So any mention of quantitative easing or continuous quantitative easing tends to have a negative effect on the currency. Any decision or speculation by the central banks to take action using any of the above methods will have an impact and possibly decide the future value of any given of any given currency. So having covered this should give us a better understanding of when we're looking ultimately at a price chart. So we're just going to look at, before we finish the presentation, just going to go to a live chart. And this is a typical scenario. I'm currently looking at the euro versus the pound. This is a daily chart. And we have a trend, an upward trend. And why is that so? Based on the information that we just covered, the sentiment from the market is that based on economic data, based on social economic data, the market believes that the euro is in a stronger position than the pound at this stage. So ongoing reports and political decisions influence currencies in this way. And if this chart was trending to the downside, then the market sentiment or belief is that the future prospects of the pound will be better or are better than the euro based on the current economic situation from which we already can get. It's available and makes it easier for us to now interpret and then place orders accordingly. So we've come to the end of the video. Hope you enjoyed the video, and hopefully this has given you a little bit more confidence when taking or making trading decisions based on now um, concrete information, and but also recent and up-to-date political developments. Thanks again for watching. Good luck with your trading. And please, for more information, visit our website at www.purpletrading.com, where we have a very friendly support team who can assist and point you in the right direction, and even forward your inquiries to me. And look forward to eventually seeing you on board. Thank you, and see you in the next video.